Thanks so much for joining us and welcome. Our program today is Open Up, the unique aspects of dental practice transactions. My name is Jamie Baskerville-Martin, and I'm the chair of Williams Mullins Healthcare section. Today, I'm joined by my colleague, Greg Bishop. Greg is the chair of our corporate section, and we are both based in Williams Mullins' Richmond office. We're going to go to slide 3 quickly, just to go over a few housekeeping items. Number one, if at any point during the presentation you want to submit a question, please feel free to do so using the Q&A button that's at the bottom of your screen. We can turn to the questions at the end of the presentation. If you're having any audio or technical problems, please feel free to use that same Q&A button, and some of our helpful marketing folks who are also on this webinar will help to troubleshoot those. And finally, no need to write down any notes on anything you see today. You will receive a copy of this deck by email after the presentation. With that, let's start our presentation in earnest. Can we go to slide 4, please? Greg, let's start by level setting a little bit. What are you seeing in terms of private equity activity in the dental or orthodontic space?
Yeah, it's very active, and it's been active for a few years now. It's not, I guess I would say, like other healthcare related physician practice groups, dental practice groups, it's been a little episodic and kind of comes in waves, but with each wave comes a more sophisticated private equity buyer that's learning how to get more out of a deal. And more out of a deal usually is better for everyone, because the model tends to work better when they get some of the bugs out of it. And I think lately that's been happening, and it's been very active, and I think it will be for for a little while. Actually, there's one other thing I'd say too in this space. A lot of times private equity does larger transactions, and when I say larger, let's say $20-30 million and higher on purchase price, or what we call enterprise value. But in the dental space, there's just not a lot of practices that are that big. So the roll up in the dental space is a lot of small practices, and I think that one thing, if I'm an owner of a dental practice, one thing to maybe be on guard for is kind of an imbalance of negotiating power. The private equity folks, these are financial experts. This is the way they make their living day in, day out. Dental professionals, if they built a good practice, what they've done really well is building a dental practice with a lot of patients. And you're not doing financial engineering as your job. So you're going to get hit with a lot of documentation, a lot of various agreements, and you're going to be learning. The good news is dentists and dental professionals are really smart people, but the bad news is you can't learn it all at once. So it's good to have, obviously, accountants, lawyers, and a financial team on your side, whether that's an investment banker or someone like that.
That's really helpful, Greg. Thank you. And it's actually a good transition to our next slide. So I think what you're saying is that a lot of the same private equity players are involved not only in dental transactions, but in those transactions that might deal with practice groups that have a couple of dozen physicians. So obviously the scale of those transactions are a little bit different, which puts dental practices in somewhat of a unique space now that private equity is expressing so much interest in that sector as well. Can you talk about some of the deal structures you have seen in the dental industry in particular?
Yeah, like any deal, a lot of the upfront structure of the deal is gonna be you're gonna set the die's going to be cast for the payout. So, and what I mean by that is, if you are a C corporation, although there's not a lot of C corporations in this space, if you are a C corporation, you're going to need to look at this very carefully up front, because most of the buyers are going to want to do an asset deal. And if you do an asset deal as a C corporation, without some pretty substantial tax planning, if at all, you're going to pay 2 levels of tax on the purchase price. Once the corporation is going to pay it, and then once the shareholders are going to pay it when the money from the deal gets distributed to the owner. So that's a terrible situation to be in. So that's one of the things, you'll want to ask your accountant before you do any deal. Say, hey, even if I get this price, does this deal make sense to me if I'm in a C corporation? Now, you get a lot more flexibility and a lot more favorable tax structuring when you do when you're an LLC, or you're an S corp, or an LLC taxes an S corp. You're a flow through entity, is what they refer to that as. So buyers are going to get to likely do a deal. They're going to likely be able to do a deal where they get a step up in the basis, meaning the assets they buy from the dental group is going to go on their balance sheet, and for tax purposes, they can immediately begin to write off their acquisition purchase price, which makes it a lot more tax efficient. If they have to buy the stock, which they're reticent to do, they're very reluctant to do that, that they don't get that write-off. The only time they get a write-off, to the extent available, is the sheltering of any income when and if they sell the practice. So it's buyers are a lot of the financial engineering and the price uptick they get on these deals is often based on the fact that they can do an asset acquisition. Also, whenever you're looking at deal structures, the buyers don't want to take on many, if any, obligations of the pre-closing deal. So they want to leave liabilities on the side of the sellers. Of course, there's an exception there, usually with working capital, which again, your accountants can help explain how that works. Whereas if you're a seller, you kind of would like to be able to move all the liabilities to the buyer. But these are things that, if you have a deal lawyer, can explain to you when you're looking at different transaction structures when you come in. And then also, and Jamie, you could probably shed a little more eloquent light on the fact that if in most states, in order to, if you're selling a medical practice, be it a physician group or a dental practice, the clinical assets need to be owned by the doctors. So private equity is not a doctor. So there's a structure there. Jamie, you have any other light you want to shed on that?
I think that's a really good reminder, and it's important because it can differ state by state. And of course, a lot of the private equity outfits have a multi-state approach, but different states have different approaches to what we would call corporate practice of medicine or corporate practice of dentistry, limiting what sort of actors can own the clinical operations. And many of them still have a corporate practice of medicine or dentistry rule that requires ownership of the clinical assets by folks who are licensed to provide that service. So understanding the implications in a particular state is very important because it will inform the structure of the deal. And it's very important, therefore, to have not only a strong corporate lawyer, but a classic healthcare lawyer as well to advise on those regulatory implications.
Right. And I would say if you are in the position of selling your practice, if you're dealing with a buyer who has done this a lot, like let's say a private equity group that several years ago bought a big practice, that practice is their platform. And that's the group that's kind of, in other words, they have a lot of know-how and a lot of reps at doing deals. So that means that that means you're going to, it's good to have counsel. It's good to have good counsel on your side if you're a seller, and good accountants and good financial advisors on your side if you're a seller. But if you're a seller, it's also good to see that the buyer kind of has their ducks in a row too, because you'll likely be asked to roll over some of your equity into their company. So you'll be doing a little bit of what we call reverse due diligence, making sure that whatever portion of the deal, let's say it's 20 to 30%, that they ask you to roll over into their business, that they have their ducks in a row. Now, you may be the initial platform seller, and if you're that practice, I'd say that a little more work might need to be done on your end to make sure you're partnering with the right buyer.
Great, thanks. Let's switch to the next slide. Of course, the economy is on everybody's mind since it's been so interesting lately. Do you anticipate, Greg, that this industry will continue to be a strong player in the market regardless of whether there's a recession?
Yeah, the good thing about our firm, we're big enough to where we work in a fair amount of industries, and we kind of get a feeling for which industries are going to be winners and which industries are going to be losers in a recession. And I don't believe a recession's here yet. I guess it depends on who you ask. But there's a fair likelihood that there is one coming. I believe that this industry, it's still hot. There's still a lot of money from what we gather in the marketplace, excited about doing deals in this space. I guess the only thing that I might caution a seller is that when you were hearing a year ago of what people were getting for their practices, you might still be getting that amount, but you got to realize too that private equity is using debt to accomplish most of these deals, or a portion of it. So their money is more expensive than it used to be. So even without a recession, given the cost of capital, it's going to put strains on some of the purchase prices. And Jamie, you may have a thought or two about, just how, not recession proof, but how healthcare deals are sometimes a better area to invest in a recession than others.
Well, Greg, you and I have both practiced long enough that we've lived through at least a couple of downturns. And at least in my experience, in the last couple of downturns, healthcare was definitely a bright spot. I think that investors saw it as a good opportunity for investment in a more secure sector. So obviously we can't predict whether that will be true this time, but healthcare historically has been a little bit more insulated, at least than some of the other sectors. And so I don't see anything that would change this time. But we certainly see and anticipate a lot of continued activity in the healthcare space. It looks like we are almost out of time, but we have one question, and I think that we have time for that. And Greg, I would gear this question to you. How can practices that want to consider a private equity transaction or some other transaction position themselves or prepare themselves well to be in a strong sell position?
I'd say the first thing I would do is I recommended earlier that you talk to your accountants. One, I don't know whether you make sure you got good accountants. Make sure, I'm not saying bigger is better, but maybe if the practice has a few accountants, it might be an indication that they're seeing some stuff going on out there. But you want to really understand your tax structure and what a deal might look like. And then, I've got to make the self-serving comment as a lawyer. At some point, you're going to need to talk to a law firm or a lawyer. And you don't need to engage them right then, but talk to them about what a transaction might look like, how they may be able to accomplish a transaction, and what might be the legal issues that would come up. And again, I think if you're dealing with a lawyer who's done transactional work and one who is, I think you can have these conversations kind of off the clock before you actually have to engage and start paying a lawyer. But I think that if you have those conversations, they can give you an idea of kind of how to start getting your practice in, using a real estate analogy, kind of getting your house, getting more curb appeal, because kind of the initial view of the practice by whoever's going to buy it, it's like the first time you meet someone, first impressions are pretty important. So that's my advice on that.
That's a great conclusion. I think we are out of time. Thanks everyone for joining us. If you did submit a question that we did not get to during this webinar, we will certainly follow up afterwards. Thanks so much for joining us.
Thanks, everybody.